Again, I can't emphasize this enough. Most people are looking to go long in a down day. They're looking to pick those bottoms, or they're looking to pick tops in an uptrending day. You're not going to get that with my course. You're going to know with the MFAM, the market flow analysis method, exactly when and where a trend changes from up to down, and when it changes from down to up, and exactly when and where to enter the market, and exactly where to take profits. All right. Okay. Now let's look at this chart. We've seen this chart a few minutes back with no indicators. Now we've got some of the tools that I teach in my program, okay? And just remember back to the phrase I said earlier, sideways markets are born from trending markets, and trending markets are born from sideways markets. Now in hindsight, you can see that this market eventually turned into a trading range. But if you look at the left of your screen, the trend was up before we entered that trading range, okay? And right in here, again, the context and setup of the market was up. We had determined that the trend had been up in that place. And then our entry into the market was this place in here. All profit objectives hit to the upside. And quite frankly, the market came down into this level, and we would have had another buy entry. And again, depending on how you would have managed that trade, even though I lay it out in the course, you could have made a little money or lost a little money, depending on how you pulled your initial stop loss up, okay? But nonetheless, you had a re-entry into the market right into this area. You had a confirming bar here, and you had a confirming bar here to actually go long this market, assuming that the market had just paused, came back maybe a little further than had anticipated in this uptrend, and the market kind of started up again. But I know a majority of traders would have been all over this market, short, long, and they would have got whipped. So if you were fortunate enough to make money in a trending market, you probably would have, most traders probably would have given that money back. Okay? And the way I use this indicator down in here, absolutely the price action in which I teach in my program, again, these two circles right in here, okay, would have had us going long the market, absolutely, unequivocally. Another important point to remember here is, even though we're looking at a few of the tools that I teach in my course, the number one thing that I really emphasize in my course and that I teach is price action. Price action, pure price, without any indicators or tools. That's number one. I teach you how to read the price like a newspaper. That's everything. Any indicator, moving average, band, anything is derived from price. And I teach you specifically what you're looking for to enter the market without any indicators or averages or any of the tools that I teach here, okay? Now, let's go through just a handful of charts and start tying in everything that we've talked about so far, okay? Alright, as you can see here on the left-hand portion of your screen, the market obviously making higher highs and higher lows all the way up until this point. Once the market hits this high here, right, the context of the market was determined to be up, obviously, right? And the setup occurred. So context and setup are pretty close to the same thing. When the market came down into this area, the entry into the market was set. Went long in here. All profit objectives hit to the upside, obviously. And again, if you're looking for a re-entry into this obvious uptrend, you'd have been re-entering into the market right up in here. Profit objectives, again, hit to the upside. If you're looking for another re-entry, the re-entry would have been right in here. Market rallied up, and eventually all your profit objectives were hit to the upside. Alright, so let's go on to the next chart. Alright, look at this next chart. This chart is the same as the last chart we looked at, but with some of the tools that I teach in my program. As you can see here, look at the left-hand portion of your screen here. Market made an obvious move to the upside, higher highs and higher lows. At this particular point, the market put in the context and the setup to look to go long the market. When the market came back down to this level, you'd be looking to enter the market long. Once again, profit objectives hit to the upside. Okay, potential re-entry occurred here and here. And right in here, this last circle right in here. Okay, market came up. Actually, here one of my more, what I like to call, more aggressive entries would have had you going long right up in here, and then the conservative entry to that would have been long right in there, and you could obviously made money. Now, let me just digress just for a second. If you're one of those traders that just looks at indicators and looks to pick those tops or bottoms in a downtrend, you would have been looking to go on this type of day. You would have been looking to go short the entire day, and I'll show you exactly where you would have been looking to go short. You would have been looking to go short where and my method was telling you that the obvious trend was up and that you should have been looking to do nothing else but look to go long. So you'd have been looking to go short right in here. Okay? You'd have been also looking to go short right up in here. But the actual short signal wouldn't have come into play until right in here. You'd have been short down in here, right approximately where the market bounced, and you would have been looking to go short right in here. Okay, according to this indicator, right? Being overbought with bearish divergence, I mean, we've been looking to go short. Why fight the obvious trend, which is to the upside? Why try to pick those tops when your life would have been much easier looking to go long, and the money would have come in quicker and easier. You wouldn't be fighting that tide. Okay, so let's move on to the next chart now. All right, this next chart is just what we talked about in an uptrend, but in a downtrend, just the opposite of what we've just covered in the last two charts. Okay, if you look at the left of this chart, the market moved from this high down to this low right in here. Okay, right at this particular point, the context of the market and the setup occurred, which told us specifically that the trend was down, it was bearish, and we wanted to do nothing else but short this market. Okay, so when the market pulled up off of these lows into this area right in here, we were doing nothing but looking to go short the market. Okay, all the profit objectives I teach would have easily been achieved to the downside in here. Market made a new low right in here. So again, our confirming signal of the context of the market and the setup again was negative. It was bearish. We were looking to do nothing but looking to go short, but we wanted to implement and use that patience, right? We wanted to patiently wait for the market to move up off the lows, in which we then got our entry signal right in here to go short the market. Market eventually came down and hit all of our profit objectives in this area. Alright, so obviously in this market, everything that I teach in my program, the context of the market was down. We were looking to do nothing but going short the market, but I can almost guarantee you if you stick a couple indicators on this chart, a lot of traders, a majority of traders would have been looking to go long, and we'll see that on our next chart here.